Hello, all Inderes TV viewers and listeners. Anora reported their Q1 actually yesterday morning, and we are here today with the company's CEO, Jacek Pastuszka, and CFO, Sigmund Toth. Welcome.
Thank you very much.
Thank you.
So let's start with the Q1. What were the highlights of the quarter and how did it go compared to your expectations?
Yes, I think the highlight of the quarter, at least for us, was that we are on track in executing on the agenda we have communicated a few months ago. We have said that we'll take measures, we'll take steps, and we will intensify our efforts to improve the underlying profitability of the beverage business, to improve the marginality of our wine and spirits brands and partnerships, and that we will be working also very hard and in a very focused way to reduce the net working capital, improve our cash position, and strengthen the balance sheet. So I think in this context, Q1 demonstrated that we are well on track on delivering on these directions, on these topics. I think the highlight of the quarter, at least for me, is double-digit EBITDA increase versus the same period last year. We obviously recognize that this is a relatively, in the overall scheme of things, a relatively small quarter that is inconclusive in terms of the full year delivery. So we are not quick to draw any conclusions from this quarter in terms of the full year delivery. We have confirmed our guidance, as you have seen. So we are neither bullish nor negative about the balance of the year. We just take it as it is, in line with our original plans. So double-digit EBITDA increase on relatively soft volumes and soft top lines, which I'm sure we'll get to later, is quite an accomplishment, I believe, of the whole organization. And then the second thing I would highlight that I'm personally very satisfied with is that the underlying marginality, the gross margin of our beverage business, both spirits and wine, has increased very significantly ahead of our expectations and also ahead of market expectations, I can see, by 240 basis points for spirits and 270 basis points for wine. So these are very strong results, very strong margin expansion, enhancement. Obviously, we should not expect that this level of increase will continue down the road, but it gives a good indication of the trajectory, margin trajectory with which we are entering the balance of the year.
Yeah, good. There was quite lengthy strikes here in Finland with the ports in March and also continuing into April, and then also the timing of the Easter was a bit different than last year. So did those have any meaningful effect to your Q1?
Yeah, both of these were important developments for Q1. On the Easter, I think there was an expectation that Easter will have a slightly positive impact on our overall performance. It probably had on sellout from the monopolies and from our retail customers to consumers. But for us, for the sell-in, because of the loss of 2 to 3 shipment dates or delivery dates, depending on the market, the number was different. It has offset this Easter impact more or less. Yes, so we didn't get any upside or downside for that matter from Easter. And then a harbor strike. Obviously, it was not in the calendars. It was not planned. Easter was. Yes, harbor strikes were not. I have to say that for me personally, as somebody who is still relatively new to the country, it's quite a surprise. I have to say that these things happen. This one was quite severe. I have to say on 2 fronts. First, it created some out of stocks in our wine business, especially on large SKUs. And obviously, at this time of the year, and especially approaching the seasonal Vapu events in Finland, this was quite painful. I have to say, we lost some sales as a result of that. And the second part was our international sales. Our deliveries to distributors were disrupted as a result of that, and this business, in the international business, if you lose 1 or 2 deliveries to large distributors, then obviously in a small quarter like the first quarter of the year, it has some impact on the overall performance. So yes, to answer your question, both of these events have impact on our performance.
Yeah, okay. Then looking at the wine segment specifically, as you mentioned, you made a good margin improvement there as you made in Q4 compared to the fairly weak periods
Yes.
Last year, but the sales is still going quite a lot down. So can you open up a bit what was driving that in Q1?
Yeah, the sales were soft in wine versus last year. Yes, minus 9%, if I remember right, and around 6 million net sales in year on year, or 6.6 million in comparing to Q1 of 23. So by any standard, this is not strong top line performance. At the same time, as we talked also before, we need to keep in mind that half of that gap is one large contract with François Lourton that we lost in Sweden regretfully last year, and we were still cycling these numbers in the first quarter of this year. It's no longer being cycled, will be cycled in Q2 of this year. So 50% of that, and then 30% of the gap is coming from low margin and low profit filler contracts, contract manufacturing contracts that we had in Køge. Together with our Center of Excellence execution, we are moving volumes between locations. Køge is in Denmark is the primary location for wine production. We were able to fill this location with more profitable own brand and partner brand volumes taken from other places in the system. So there was no longer a need to fill the capacity with the filler, low profit filler business. So there is an element of this mix management that is part of our effort, the primary part of our effort to drive marginality to a higher level.
Yeah, that's clear. And then I guess the clear disappointment in earnings terms was the industrial segment in Q1. So what was driving earnings down there?
Yeah, the key driver here was the combination of generally lower volume in our production network, and then depressed pricing on the side products. The availability of side products is obviously the function of how much ethanol and how much we produce ourselves. And then the pricing is very much outside of our control on these products, because it is based on formulas. And maybe paradoxically, the benefit that we get on the barley pricing in our overall P&L was offset to a very large extent by the fact that our pricing on side products was depressed, because the barley pricing is used heavily in this pricing formulas. So industrial delivered poor results in the first quarter of this year. The reasons are quite straightforward, are quite simple. It's hard to make any predictions about full year based on this first quarter of the year.
That's clear. Okay. Then maybe if I ask Sigmund the next one, you have been now raising prices quite a lot over the last 6 to 9 months, and gross margins have improved. Are we now in a level which should be pretty stable going forward, or do you still see room for improvement?
Well, I think there's always room for improvement, isn't there? I think that as generally in consumer goods, or I would say in prices in general, right? I think that the levels of year-over-year increase, I hope, I think for all of us, that they will not be at the level that they were last year. And I think that that's the case also for our products, right? That there was a need due to input cost inflation to correct our prices to consumers. And now we are more in a more steady state, right? That being said, there's always room for improvement. There's always there are also some parts of the business, I would say, where for one factor or another could be partner wines is one typical example where you have to take things more gradually, or you have a third party to contend with beyond the consumer and ourselves. So yes, I mean, we are looking at it at every single pricing window in the monopolies and negotiations with trade, how you can improve our picture while still offering good value to the consumer. So I think now it has gone from something which is general across the board to something which is more specific, where you look at it. I mean, really, actually, on the product by product level, to get the right price for the given product.
Yeah, that's clear. Then on the outlook, like you mentioned, Jacek, you maintained your full year outlook. Is there any changes in the underlying market assumptions, or did the weakness in the industrial impact in any way kind of your considerations of the guidance or outlook?
Well, I think as we mentioned a bit on the earnings call yesterday, there are a couple of, I mean, it's the first quarter is not dispositive in any way, right? It's a small quarter. Typically, one-time events like the strike or Easter, you know, they have a disproportionate effect on it. You know, in terms of things that are on the negative side, right? The softness of the volumes, including, you know, from our main customers. That is a concern, you know, is that because people were taking dry January a bit even more seriously, you know, than in previous years, or this was the sort of the last dip before, you know, more optimism is coming, you know, as interest rates start stabilizing or going down. That's a bit anyone's guess, right? Right now. So it's something that we have to monitor kind of closely. And then, you know, normally our business is quite is non-cyclical, even a bit counter-cyclical. So we'll see, but this was very exceptional, you know, events of last year. So that's one side, the softness of the volumes, and then on the other side, you know, there were some positive impacts, like the fact that most of our products seem to have supported quite well actually these price increases, and that, you know, we would be looking to optimize, you know, not at the same degree, but even a bit more, you know, on the product. So there are some positives, there are some negatives, and then there is industrial, which as Jacek explained, is a bit outside of our control. So those are the elements. We are within our guidance, and but you know, it's a very, very early start. So not too much to be read into that.
Okay, good. Then maybe the last question to Jacek. I think you mentioned last time, and which is obviously clear, that you are focusing now more on the profitability, but you have been also showing declining sales numbers quite a while. So when should we expect that to turn around?
Yeah, good try. As you know, we are not guiding on net revenue. Obviously, the fact that we delivered 8% decline, 7.9 to be precise, decline in the first quarter on net revenue is not something I would be taking lightly. It's a big gap. Obviously, when you break it down into smaller pieces, as we have done in the earnings call and partially also today, you start seeing that it's not coming from the core of the business, which is the monopolies in the three monopoly market, plus the large retail business that we have in Denmark. Because all of these businesses, both on spirits and on wine, are delivering actually net revenue growth year on year. As I said in the earnings call, 4 out of 4 Nordic markets on spirits are ahead of last year in net revenue, and 3 out of 4 of the Nordic markets on the wine side are ahead of last year in net sales, and the only exception is Sweden, for the reasons that we have just discussed. So I'm not taking this gap lightly. When you break it down into smaller pieces, you see that it's luckily not coming from the core of the business. The issues that, or the challenges, or the trends that Sigmund was talking about are obviously there. Now the volume softness in the monopolies, or generally the declining alcohol consumption in the Nordic markets, is a trend that will stay with us for some time. If not forever. And then our job is to offset it through pricing, through revenue management, and then making sure that we focus on the businesses, on the packets that are margin accretive for us in order to bring the overall performance, financial performance of the company up. So I will not give any specific prediction on when our net revenue will start improving, but we are working hard on it. To find the pockets of growth within our existing portfolio and to bring it to the level that will not create concerns in the future.
Okay, that's clear. Thank you very much, gentlemen, and good luck for the rest of the year.
Thank you very much.
Thank you.
Thank you.